Microsoft just saying on their conference call that demand for AI service still exceeds the company's ability to deliver it. So they're going to continue to invest in CapEx. In fact, they are likely to accelerate it as much as possible. They also announced on the conference call guidance for the upcoming quarter. How did it compare to what Wall Street had in terms of expectations? We'll also go through the numbers. We'll take a look at the different business units over at Microsoft. Look at the financials, which, as you can imagine, are pretty darn good. And then technically over at Microsoft, I'm seeing in the after hours powering up over 8.5%. But that doesn't tell the full story with Microsoft, because over the past year, shares are down 2%. Year to date, down 6%. So you had to get this one at the right price. And I tell you what, the technical chart patterns tell you when to buy. Speaking of that, you're probably wondering where my earnings videos are. They're now over Equity Empire. Premium subscribers are getting access to videos that you're not seeing anywhere else. Microsoft reporting their Q3 earnings. Revenue came in at $70 billion. Wall Street was expecting a number closer to $68 billion. Even the high-end expectations were for $69 billion, 13% growth, beating those expectations. We got the all-important guidance on the conference call. Revenue range between $73.15 up to $74 billion. Past several quarters, I don't believe Microsoft has actually been above expectations, and shares haven't performed well. This time, a change. Wall Street expectations were for $72.26 billion, so even the low end of $73 billion. Over and above that, the high end was for 74. There's probably some people believing a $75 billion number is possible for Microsoft. Shares in the after hours popping on that news. Talking about popping, you've got your search and news advertising. Everybody talking about how Google is dead. Well, how is Bing growing at 21%? X currency, just showing you there's still a lot of strength in that search and advertising business. Across the board, you have Azure growing at 33% in the most recent quarter. That follows Google's number, which I believe was at 28%. Across the board, you're seeing growth over at Microsoft. And again, on the conference call, very critical thing. They not only reiterated the amount of CapEx spend that they're going to do, and we'll talk about that as it relates to cash flows here in a moment, but they also reiterated that demand for AI and AI data centers, they were hoping to actually not be supply constrained, meaning a customer calls them up and says, hey, we need some AI from you, Microsoft. And Microsoft is actually turning away some customers, or in probably some cases throttling their ability to use as much AI as they want to. The company was hoping to be in balance by this quarter, this fiscal Q4 for Microsoft. They just said on the conference call that actually will move into the back half of the year, as AI demand is still off the charts. You can probably imagine what that will mean for semiconductor companies. Now, Microsoft, the most recent quarter, like we said, $70 billion in revenue. Last year, $61.9 billion. It's a beautiful software business, $22 billion of cost to give you gross margin of $48 billion. Last year, it was 43. Company done a nice job, like a lot of these tech companies, basically keeping cost in check year over year. You're seeing declines on general administrative, sales roughly flat, continuing increase in research and development. That's the only operating cost that saw a meaningful increase over the last year on a quarterly basis. Operating income coming in at $32 billion, net income $25 billion. We go over these numbers very quickly, but I'll remind you that most companies aren't worth $25 billion. Many companies can't even get to $25 billion in revenue for a year or a decade. This company prints net income, $25 billion in a quarter. Now, in terms of cash balance sheet, company has a lot of cash. They've got even more sitting down here on that property, plant, and equipment side as those data centers continue to swell this part of the balance sheet for these companies. They do have a fair amount of long-term debt, but it's obviously completely manageable based on the financials that I've outlined. Now, in terms of cash flow, $37 billion of operating cash flow off of $25 billion worth of net income. Last year, you were at $32 billion. So you've bolted on about $5 billion to your operating cash flow number. Now, the all-important data center addition to property, plant, and equipment coming in at $16 billion. So what we just saw with Meta, they raised their guidance or raised their expectations for data center spend. Microsoft's committing to, I believe, $80 billion. Right now, they're spending about $16 billion. That means the back half of the year is probably going to be very aggressive from that standpoint. You're going to have Google, Amazon, Microsoft, Meta, all in the marketplace trying to secure data center capacity. So it is going to be tight from a supply perspective, and it's going to be tight who's going to get their hands on these GPUs as they continue to be in very, very, very hot supply. Now, in terms of what they do with their excess cash flow, because look, the company could spend $20 billion, $25 billion on property, plant, and equipment. They'd still have some money left over. Well, they continue to buy back the shares, $4.8 billion in the most recent quarter, and another $6.2 billion or so on dividends year over year. Common stock repurchases basically flat on a 9-month basis, up fractionally, and dividends continue to increase over at this company as, like a lot of these tech companies that have dividends, they continue to raise them year over year. Everything financially looking absolutely fantastic. And then technically, when this one was in this green box, I have these green boxes on my charts. If you tune into the Friday recap show, we recap the technical chart patterns from Microsoft and the other Mag 7 or FANG stocks every single week. When I have a green box, it means it's in a buying zone. When you've peaked out of the green box like this one, probably means you're going to retrace and test the all-time highs on this one. You've got areas up here at 420 all the way back up to 460 on this one is likely the pattern that these are headed to. When you get to 460, you might get a reject at that area. The reject should be bought. Also, less likely is sometimes you have a breakout above the all-time highs. Not exactly sure what would cause that for Microsoft. Maybe another series of announcements in Q4. A back test to 475 or 465 or so would be the buying opportunity. Those of you that bought this one south of 380 or so are probably sitting on some fat gains at this point, as Microsoft in the after-hours shares are climbing by about 7% on very, very strong guidance for the Q4. Also, the current quarter showing that everything is in line with this business, and AI demand is off the chart. So you probably can imagine all your favorite semiconductor companies, they're going to be retesting the highs that they made more recently, probably over the next couple of months, as the back half of this year looks amazing for those companies. Hopefully, guys, enjoyed today's video. Again, check out Equity Empire for more videos, stock picks, and more. Till then, good luck with your investments.